Like you were doing well at Kodak and your family had all their money in Kodak. What happened? Xerox is owned by you. So what happened? You run the best business in Ukraine, and then there's war. I could list a million different risks that destroy wealth. That's 450 trillion won on one side and 1 trillion won in digital cash on the other. Well, I had a building. I got rid of all the things that made the building a problem and turned it into a digital building that is invisible, immortal, can't be destroyed, and can be teleported. Online, this type of financial engineering approach is often called the infinite money glitch, but I'm not sure if it's infinite or not. There's no problem with the money. It is a shift in the capital markets towards technology. A lot of energy is released when a system goes from a state with more disorder and higher energy to a state with less disorder and lower energy. Picture steam turning into water. Is there a problem with the money? It's just steam turning into water as it cools. What takes place when water freezes? It's not a heat bug but heat. What takes place when heat is added? It melts into water which then turns into steam. If you look at the capital markets, there is between 800 and 900 trillion dollars worth of income there. With this much money, people have invested in a wide range of different assets. Why did 98% of the SP 500 companies not do well? Why do 7 companies make up 1% of all the returns? If you look into the convertible bond market, you can see what I talked about. When someone sells a convertible bond, buyers don't know if it worked for 5 years. When they make a new convertible bond, it's a different idea for how to lend money. It's not working very well. Okay, so think about junk bonds, private loans, preferred stocks, and junk bonds. All of these are very inefficient. People with a fixed income get very low returns. What if I take all of this credit risk and partner risk in exchange for this yield? That means that half of the $900 trillion in capital in the world's capital markets is just long-term capital. That's just money. Rich people only want to keep their money. Rich people only want to keep their money. I will give a group $1 billion to put in a fund. The only thing you want is to keep the $1 billion. Yes, exactly, yes. That $450 trillion is spent on buildings that are falling apart. Lots of money has been put into cars, companies, and other things that have risks typical of the 20th century. Foreclosure, war, tariffs, and tornadoes. Tax, like you were doing well at Kodak and your family had all their money in Kodak. What happened? Or do you own a Xerox? What happened? You have the best business in Ukraine, and then there's a war. I could list a million different risks that destroy wealth. There is 450 trillion on one side and 1 trillion digital wealth on the other. If I had a building, I would get rid of all the things that make it a problem and turn it into a digital building that can't be seen, can't be destroyed, and can be teleported. That would be cool. Okay. That's what Bitcoin is then. This is what folks call a glitch. It's not that it is. It's energy moving from a state called steam, which is very disorganized, wasteful, and full of spinning balls, to a state with more order, right? It's going from $1 million to you because you're in Africa. Put your money into any property in Africa, in any country, and hold on to it for 30 years. There's nothing you'd want to put your money into. I ask, well, would you rather own $1 billion worth of property in Africa or in New York City? It's clear that you'd rather take the risk in Nigeria than in New York City. Then I ask, would you rather own $1 billion worth of real estate in New York City, Bitcoin, or Cyber Manhattan on the internet? There is no mayor of Manhattan. In online Manhattan, there is no property tax due. There are no storms. You can't tell the weather in Cyber Manhattan. Everyone lives on forever. In the internet New York, you know that you can travel to Cyber Manhattan 60 times every second. It can be set up to be an AI page. So what you see isn't a bug. It's just money leaving a country that isn't working well, like Argentina and Nigeria, where hyperinflation is happening. Okay, so if I'm there, I could buy and sell dollars and pesos. You may remember that 1 peso was equal to $1. It's about 1,400 or 1,200 pesos to the dollar now. Was there a problem? Like, did that happen or did that happen? Or was that just the market? That's what the free market is all about. Capital moves to places that treat it well. So if I have money in Argentina, I would put it in the United States. Also, let's take the dollar. If I have money in it, 100 years ago, it cost $10,000 to buy an acre of land on the water in Miami Beach. $1 million today. Real estate, especially waterfront homes in Florida, lost 99.9% of their value against the dollar. Okay, is that a bug? Right? And in 20 years, the peso dropped 99.9% of its value against the dollar. Is that a bug? That's just money moving from an asset that isn't very strong to an asset that isn't very strong. And the rise of Bitcoin is money moving from financial and real assets from the 20th century to the digital economy of the 21st. As this part of the economy of the 20th century shrinks, the difference between the cost of capital and the Bitcoin world, which is 50% right now, grows. Also, the cost of cash in the dollar world is about 12 to 14%. See, that's pretty much the comeback of the SP. In other words, the SP sets the cost of capital for traditional commodities. Bitcoin is the opposite of that. So Bitcoin is about 3.5 times the SP. It also changes 3.5 times as much. Take a look at the Bitcoin fluctuation graph, 500 against the VIX. So it's not hard to understand if you look at the two. Any scientist will tell you that it's a thermodynamic idea. This stuff is hot. This liquid is cold. I open the gate and mix the oil and water. How hot is the tub? It's in the middle, right? The temperature is going to be somewhere between very hot and very cold. It would be nice if there were some ice cubes in the middle. I've let out boiling hot water here. While some of the ice cubes will melt, you'll still end up with a warm bath. The only thing that will be different is that, say, 10 years from now, instead of 50 vol versus 15 vol, it might be 45 to 4038363228. This R and this instability are coming in. This just came up. What will happen when Apple, Google, Microsoft, Facebook, or anyone else buys Bitcoin? What would happen if the bottom 98% of the SP 500 bought Bitcoin? Their performance would start to get closer to that of big tech companies. Because of this, as they add Bitcoin to the balance sheet, the SP index will move in the direction of Bitcoin. As the ratio drops from 100 to 1 to 10 to 5, Bitcoin's results will move closer to the SP. And these things even out. To be more efficient, it would be better to be able to teleport a building between New York and London 60 times a second, if you think of it in terms of physics. That's better than how your family invested 30 to 40 years ago in London, but the law changed last month, and now you lose all your money. Bitcoin is the way that money is changed digitally. MicroStrategy is just a company that is taking advantage of the move to digital. However, I would tell Apple not to buy back $100 billion worth of stock. Get 100 million Bitcoin. It will reach 500 billion. Your $500 billion company will grow 20% every year. A year from now, your investments will earn you 100 billion. Your investors will look at it and add $1 trillion or $2 trillion to your market cap. This means that the running business will make up 60% of the company's value and the balance sheet will make up 40%. And the risk will change, since in a normal business,